Joining me right now is Mr. Jignesh Shah, Vice Chairman, MCX-SX. Also joining in the discussion is Mr. Joseph Messi. He's MD CEO, MCX-SX. Mr. Shah, let's start with you first. And a couple of decades back, when an exchange was launched, it did change a lot of ways that the Indian equity markets are trading now. After those 2 decades, now with MCX-SX, what new changes are you expecting?
I think exchange model keeps evolving. If you see every century has a model. In the 19th century, the whole model of it was funding the infrastructure for the public utility, rail, bridge, etc., etc. BSE is the oldest exchange. It contributed to so many infrastructure development at that time. The native share and stockbrokers, they have delivered, and they continue to delivering. Same NSE came with a latest technology trend, brought in transparency, professional management. They contributed. That was before 20 years when NSE started. Now I think if you see the trend and what MCX-SX is a DNA of growth and inclusion, and the whole thing is that if you don't make the masses participating in the growth, what happens, and the social contributions, hypothetically if it is ignored, and then you have a Occupy Wall Street kind of thing. So exchanges has to play that role of a social inclusion, yet catering to the needs of the capital formation and all. So I think exchange in 2013, what we are, this century's first equity exchange from India. Definitely this century we will be doing the same thing, what other exchanges have done. And growth and inclusion is going to be the capital exchange or a stock exchange model worldwide, and we are going to do the same in India.
Mr. Messi, SX40 is the new kid on the block. What are the similarities or the differences that you see with other exchanges in the market?
I would talk of differences because there are significant differences, and it's more patterned on global lines. It's a 40 share price index. We've gone ahead and taken free float market capitalization, which is the case with other indices also. However, what we've done is we've also added liquidity criteria. And along with the liquidity criteria, we've now added classification which is global. We've tied up with ICB to do this classification, and we have industry caps. Industry caps ensure that no single industry gets excessive weightage, and that's how we could manage to get growth companies. And we've seen some companies are different from what is there in current indices, and the index has delivered much better return compared to the other 2 indices in the country.
So that really brings the next question, because when are you launching it on the global exchanges as well? It's something that has been the question asked around.
We need to first launch the index here in India. I think stabilize it, see that a very good trading interest is developed. And obviously, I think cross-listing of product is becoming common. We'll certainly consider at some stage.
Mr. Shah, I mean, you have been talking about retail participation for a very long time. That is something that you have been pushing on as well. How would you want to take it across board when it really comes to that?
It's very important to have retail participation. Retail participation, the jobbers, the arbitragers, they are also important constituents of any successful capital market model. Also FIIs, domestic financial institution, the HNIs that forms a complete 360-degree approach. Now to encourage retail participation, we are going to, as we said, that we have launched the largest financial market literacy program ever in this country. We have tied up with universities and financial institutes, training institutes across the all the 29 states, and 54 institutes and universities have signed up. So our footprint is much more larger in that aspect to attract retail. Second, our membership itself is a very innovative. 10% of the members are the rural entrepreneur membership and the professional entrepreneur membership, which no exchange has done before. And we are sponsoring again uniquely 2 MBA programs, two students from their institute, the membership firm, for MBA into financial markets. Now on the long term, this serves a very big catalytic effect to bring in the retail investors. Now retail investors also need to just not be educated on equity, but fixed income is a very big important part in their life, fixed income, bonds and other things. That a dedicated focus approach is required.
So that's one aspect of the membership drive that you're driving in. But what incentives are you giving out into the market? Because BSE has come out with some incentives for members and for trading as well. How are you looking at that?
In our case, we will be announcing the scheme itself. When you see it, you will see the difference. B, it will be very simple. C, it will be available to all, rather than exclusively some can take advantage. Nothing of that sort. And the fourth, it will be bringing down the cost of transactions very fairly, transparently, and uniformly to all. Now, once that happens, and education of that, it will be explained to everyone in a very fine way and with an adequate notice. This, we are sure, no exchange has done it before, and it is going to really differentiate us. In addition to that, our transaction costs are already at an 50% lower, approximately 35 to 50% lower than the exchange. And at the same time, we don't believe that it should be too high and it should not be overly low. So I'm saying it should not be a .com type of thing where the viability of the exchange itself is really, people keep thinking on that. So that's the approach when you follow. I think it's an optimal thing, and this will allow exchange to cater to the industry for perpetuity.
But are you countering it the way BSE is coming out with, or would, as you said, you would take your own course when you go ahead with those things?
No. If you see the way we have developed electricity exchange and the promoter group has developed, and it is a systematic, steady, solid, and it's a long term. It's not an 100-meter sprint race which will come whether in terms of volumes nor in terms of participation. And it will go step by step, but also at the same time, it will not be theoretically slow.
You mentioned about the costing part of it there. You know, there has been a talk in the market, the kind of market that we are in right now, the costs are increasing, whether it's the transaction cost, compliance cost, taxes, all of that. Is there any way that you are looking at or incentivizing that as well?
No, it's total cost. What is there to transact? It will be brought down. The cost of transaction itself is there. When we release the incentive scheme, you will find that also will be very clearly, transparently be uniformly available to all. It will be very unique, which will get the DFIs, FIIs, the retail investors, as well as the jobbers and other class who are really participating in the market. And we are going to demonstrate the same respect all across. This will bring the desired liquidity, which will take you gradually towards growth, and it will be step by step but solid.
What has been the investment in bringing about this exchange, and what kind of a return ratios are you looking at as we go forward in the years?
Regarding the investment side of the story, I think Ms. Massey will be, but the approach is that they are all long-term financial institution creation. Okay, we are in some 200-250 surplus of the net worth and other thing. Whatever is SEBI has prescribed, we are fairly on that. We are on a cash positive side of the story. On the currency side, after the Competition Commission asked NSE to implement the charge, and thereafter both the exchange could levy the charge on the transaction. So that has ensured the stability of the whole institution. In addition to that, we have huge good shareholder fund also by all the banks and the financial institution along with the two promoters. So that's right. Second, as I said, that we are not on a .com charge approach. We will be charging, but it will be reasonable. It will not be extremely high like a monopoly. It will not be extremely low like .com. So I think this is going to be the most stable, optimally priced exchange, and we will get our fair share in the expanded market, which constitute the growth of the pie itself will be bigger.
Mr. Massey, you want to add some numbers to that?
The total project outlay has been upwards of 400 crores. And we will need additional capital contribution over a period of time. You know, the SEBI has come out with new regulations. There are methods of achieving those regulations in terms of either raising fresh capital, existing shareholders infusing more capital into it. So those strategies are also there. Certainly, exchange is an infrastructure project. So we will need capital over the next 3 years' time. And, you know, we have lined up resources in terms of how we are going to actually go about implementing that strategy. That's one. On the costing side, I think we've done some comparison. Our exchange is really optimally costed, both in terms of how we are pricing and also what our cost structures are. This is an advantage to any new institution which comes in. You get the best technology, optimally priced technology. You don't get with legacy cost. your team size is just appropriate. So I think some of those advantages are available to us, which possibly are not available to the existing competition. And we also have a fairly good amount of head start because setting up a new exchange requires familiarity. That familiarity is already there because we've been operating for the last 4 years. So I think there are many advantages which are adding to our strength. So our cost of penetrating the market would not be as high as a completely new entrant without any past.